The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Good morning, everyone. Basil Chapman on this 24th day of April. My pleasure to be here Monday through Friday. And thank you to our host. Great programming. Let's try to keep that standard up. Dow is up 218 at 20,765. The S&P is up 23 at 2372. Comp index is up 68 at 59.78. The VIX has slumped down to the 11s, down 3.34%. That is huge. I'm looking at the E-mini right here, up 22. You'll see it's in the Chapman Wave inside track resistance area right now, and off the 2397.25 all-time high on the first, made the low of 2317, so that's 80 points down. And now it's kind of in the middle of the range, well, a little bit more than the middle of the range at 2369. Here's the 120-minute chart. Look at the 2375 high, round number high that was made back on the about the 5th of April. Yeah, 5th of April, comes down, makes a kind of a cup formation, and starts to rally and keeps hitting resistance on this inside track resistance line. And then, boom, yesterday from the news in France, with the election results, massive spike to the upside, and you go to a peak D. We're in a peak E right now, having gone just a little bit above the high of 2375. We went to 2376.75. A couple of things I'll talk about in a moment. Let me just move this away, and you'll see what's very important. You see this weekly chart here, right here? The weekly chart has pulled back in time. 1, 2, 3, 4, 5, 6, 7. This is the 8th week of consolidation. And what I've been talking about is this rotational market. And in this particular rotational market, what we hadn't seen is a couple of things. One is in the QQQ series. So the weekly chart is still at peak E. In the QQQ series, the spike today broke out above the 133.48 high, went to 134.21. It's a leg E to a gap up to the upside, but what it does is that it doesn't look like it, but that tiny little plus sign, that is a price point, and that price point says that I have to call it at least a leg F to the upside. So let's put the F in. And most importantly, we've extended leg C in the monthly chart. I'm going to try to put the whole package together in a moment. Let me just continue and say, so the QQQ series has this gap that at some point it will fill. When is the issue? But most importantly, we've got support now. Well, the entire 133 should be support. And if once that breaks, then that says, uh-oh, that's a problem. But in the meantime, this is very good action. Cannot deny it. But here's the issue. Look, if I go to the SMHs, they had a spike, just missed by a few cents, making an all-time high. It is a peak G, and it recycles up. So all I can say is that if it goes to a new high above 80.05, I just have to consider that it's recycled to the upside, and that the only letter I can call it is, at this point, B. It might be a C, but it's recycled in the daily. That should go to slightly higher highs. So this is a very important moment. The reason why I say it's an important moment is that the weekly charts have been, in most cases, have been extraordinary. But the SMH, the semiconductor market vector ETF, has been extraordinary to the upside in that it has refused so far to break the up channel support. And at the same time, the technicals are slightly weaker. So, hey, I'll try to put the whole thing together in a moment, but I want to finish up by looking at on this particular section, by looking at a couple of things. NYA.X, this is the New York Stock Exchange. See, this is a good rally in the weekly, but nothing great. But it Same thing in the daily. Very strong day. I mean, obviously, gap up like this. So how we follow through in midweek is going to be very important. This is the reason why. Good example here is the MACD finally crossed positive. The histogram was improving even as the price was coming down. It did go to a trough D like the Dow. And it is also having a positive divergence between the higher stochastic and the lower price. So this suggests that there is a chance that if by Wednesday to Thursday, we've seen no more than a very slight pullback in the markets and they're holding stable here, those weekly charts will recycle to the upside. And if it's done in April, leg C will continue. If it's done in May, you're going to get yourself a leg D. And tomorrow I will spend some time talking about other implications that are going on here that would suggest that the rotational correction could start for the laggards, in other words, the very best of the best, like the QQQ series, could start in May. And just a real couple of things. If you look at the top, the Nifty 50 of the IBD, Investor Business Daily, I'm looking just even the top 10. Look, a very good action here. In the daily, beat is the symbol by Telemetry Inc. Remote heart monitors, just a rocket ship to the upside in the monthly chart. And what's really important is that the weekly chart is suggesting that it's getting closer and closer to some kind of a pullback. And as I put them together, Arista, a Networks, a NET, where did that go? I'll put it over here again. A NET. A leg F, I'm calling it right now in the daily, a leg F in the weekly, and only a leg B in the monthly. So things are going on. I'm not going to go through them all, other than to say there's a really good chance that within the context, let me just go to LRCX, which was the Lam Research, which I said was just on an incredible tear. Evidently, they're booking just way ahead for semiconductors. They're building new plants, etc. So when I'm looking at the SMHs, I'm saying they're becoming extremely overbought. We did get stopped out the other day of a short position, a very small loss, but it was a loss nevertheless, even though it was tiny. Because it did pull back quite sharply and then just broke right out. And that's what we're looking at. So let me just quickly go through the gold right now. Gold's down. It's come back quite a bit. It's only down 15. It was down much more before. It's at 1273. The weekly, the daily, and the monthly are still holding in an uptrend at this particular point. I would suggest that under 1245, gold has got a real problem. And right now it's at 1273. The dollar, meanwhile, there's a dichotomy when you got the dollar down 85 cents at 99.12. That's because the British pound has such a big, strong day last night and today. So the dollar is down at leg D under the 98.86 low that was made on the left side back in late March. And it's going to be testing this uptrend support in the weekly chart. But in the meantime, monthly chart says it's holding pretty well. I can just tell you this. I said back in the 1999 area, it's a problem. It's a real problem if it closes under 97.70. And we'll look at the TLT as we're about to go to a break. This could be a peak F, pulling back from the 200 period, moving average down 88 cents at 122.66. And that should favor right now in the shorter term, the XLF, which is having a very strong day. It's up 2.3%. Basil Chapman, Tiger Technicians, will be back with our callers straight after these important messages. Dow's up 206.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, folks, we're back to showing the 10-minute E-mini made a peak D-top right there at 6:20 this morning at 2376.75, pulling back in a leg D to the downside here, and you can see the same kind of pattern where you've got these arch formation failures right here. So we're going to be watching this very closely. A couple of things I want to discuss, but first I'd like to go to Ben in Tallahassee. Ben, how are you?
Great, Basil. How are you doing?
I'm well, thank you.
Excellent. So I was looking at the SMH this morning, and it looks like, is it a round number? It is. It's 80, right, for a high?
Oh, okay, yes.
Now,
let me just let me just while I was looking at earlier and now, let me just double check. It is 80 still. Yep, 80 round number high, failing by 5 cents to make a new all-time high.
Does that need to be the peak to meet your criteria as a round number?
I like to see it at
I'm sorry,
all-time
it doesn't need to be the high. Yeah.
Right, so I need to see it at all-time highs, or at least new recovery highs, or at lows. And at this particular point, so far, it meets all the criteria that I'd be looking for, and I'll explain why. The high that was made in March was 80.05. The high that's made so far, and the day is very, very young, as you know, and we've still got a week to go for the month of April. I like to see something that I call the Chapman Wave 2-bar reversal. And I like to see it in weekly and monthly, but especially monthly charts. And they usually start off in daily charts, but it's great when it coincides with all the different time frames. But at the same time, there is so much power in the semiconductor area that anytime there's news, they just break to the upside. So all I can say is that under the metrics that I'd be using right now for a V-shaped top, for a failed, if there was to be a turn down, and actually we're at the lows in the SMHs right now, but the day is young. If in fact the SMHs at 79.50 close under the high of Thursday of 79.01, so in other words, if they close in the next 2 days in the 78.70s, I'm going to have to relook at this again, because there's a chance that we've got a failure pattern in the MACD and the slow stochastic in the daily chart. There hasn't been any real change in the negative action of the weekly technicals, which are starting to turn down, have been turning down. And all I can say is that we're meeting all the criteria that I would look for now, other than the fact that there could be further short covering, because you can imagine how many people, if they haven't covered immediately, or if they didn't have buy stops or stops in overnight that were triggered. In other words, if they had the positions that could only be closed at the open on the following day, that would be this morning at 9:30, then they might even be waiting to say, hey, wait a minute, I don't want to buy a gap up of 200 points in the Dow, 25 points, 23 points in the SMHs, in the S&P. I'm going to wait. So the other reason,
the other reason I bring this up is, just combining a couple other methodologies. There's a pretty high volume spike at 79.98. So if it closes, I was thinking if you combine the round number with a little bit of Tom's method of the volume, it could make for an interesting starter position on the SOXS.
So let me do something else. It's got a peak, a leg E at the moment in the 120-minute chart in the SMHs. There was something else that I was looking at, which I'd like to just check on right now. In terms of the volume on...
It's really light today, and I think it leaped over a pretty high volume, 70. I forget the exact day, but I think it was 79.98.
Right. Yeah, but I was looking at it over the weekend, and I was pleased to see, at least in my situation, I was pleased to see that the huge volume spike on the 12th of April in the semiconductor index was not the low the following day. The next day had just normal volume. If there was a coincidental low, I would have to look at this and say, you know what, I've got that rule of volume, a break to the downside with a massive volume spike, the biggest spike in months and months, says that you could rally, and you could rally for 28 sessions. And if that holds, you could go for 52 sessions or 56 sessions. At this particular point, it looks like there's a potential for a failure. But I do want to emphasize something, and this is really, to me, it's a very important modus operandi. And that is, if you keep in mind that there's a rotation going on, and as I said, I just went through, before I came on air, for myself, I went through a huge amount of the Investors Business Daily top 15 stocks. I think I did about 10, 11 of them. That's a lot to do just to see what happened since the gap this morning. And not all of them are participating like you think. And that says to me, look, I'm showing you the market vector semiconductor. That's on the right, the monthly chart. I find it hard to believe it can happen. We've seen it happen occasionally, but not that regularly. I find it hard to believe that we aren't going to have some kind of a consolidation in the semiconductor index at this stage, when although the MACD and stochastic are still very good, the number of green bars since the low that was made February of 2016. We've just gone straight up from 45.03 to 80.05, and we've done that with two tiny red candles. And that says to me that at some point we should see another red candle, and that red candle should probably occur where the weekly chart is becoming somewhat vulnerable. I think that's this moment right here. So if I'm correct in saying, look at the rolling correction, then the semiconductors should be in the area right now of at least attempting to have a pullback that says we need a breather, we need to re-energize. I'm completely wrong, I can assure you. If this SMHs by Thursday or Friday are hitting 82.50, then I just have to shake my head and say, just go fully long and stay long, because the acceleration phase is starting. But I still think
you have to admit that the technicals don't look that great. I mean, the weekly's still under 80, I think, and as well as the daily.
77%, 77%, and the MACD's pull back. But price is the arbiter of a trend, and if we start to close above the high of 80.05, I have to say, hey, if there's still more room to go, you don't have to be long, but you shouldn't be shorting.
In my last comment, I'll let you go, is it's interesting that the NASDAQ and the Qs are making new highs, but not the SMH as well.
That's been part of the benchmark. That's what I've been looking at. I've been saying that because the semiconductors was so important in bringing the NASDAQ to higher highs, that we have to be considering that if the semiconductor starts to pull back, it will impact, because there's so many big semiconductor stocks in the NASDAQ, in the QQQ series. So that's my thinking. We'll see what happens.
Good.
All I can say is that the day is very young.
Oh, I'm with you. Trust me. I totally agree. Thank you very much.
Thank you for
Have a great day.
Good comments. Good comments, man. Thank you. So, folks, we'll be back. Dallas pulled back. Pulled back a little bit. It's at 188. It's off the highs, but it's still pretty strong. But look at the SMA. Look at the futures contracts. They're pulling back right there.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
So FTNT. Remember we looked at it the other day? This is Fortinet Inc. Trading now at 40.01, up 48 cents in leg D in the daily, having made a cup formation and broken out. Leg D in the weekly chart and leg C in the monthly chart. And it's acting very well. The big question is, okay, so it's got to do with D's. Does that mean it should be pulling back? Well, what it does say is that if you look at the way that the MACD has turned into this cup formation, the way the stochastic has popped back over 80% is at 81, the way it's above the 9-period moving average support of 38.64 and then 37.74 is the next level, I'm saying to myself, if it's in an area that's been ignoring downturns, but in fact has been holding very well, then if you are long, or if you start a position and you're wanting to add to it, then have a little patience, because there should be some kind of a pullback into the 38.50, maybe 38.20 area within 3 days if this is going to turn down. If in fact it's part of, I can't remember, Fortinet is a part of the financial world, I forgot to put down what it does. That means that if we're looking, if I can be reminded, I'll do this right now, Fortinet Inc., and I'll just type it in here. Fortinet Inc. And then I'll click it on, and it says, network security solutions. Okay, firewalls. They say, that's a good area. All right, that's fine. So it's in a different area to what I thought. What I'm going to suggest is that because it's a strong-looking stock, that you hold off adding right now. But I definitely would consider, and just ask me the question again, if it pulls back, even if it pulls back just a little bit under the 38.65 9-period exponential moving average, let's look at it again. One of the reasons being we've got just days to go for the end of April, and the MACD has crossed positive. It could change by the end of April, but in the meantime, it's crossed positive, and the stochastic's at 85%. So I've almost got like a hat-trick top where everything's in place, and it's acting very well. So I wouldn't be taking anything off. I would be thinking of adding to the position. There's a rising wedge. It went above, and there again, that supports in the 38.50s. So let's see what happens at 38.50, and as soon as it gets, just send me an email or ask me the question, and we'll look at it again. And if you're in it, congratulations. Now, I did want to take a moment here just to go through this. This is the 120-minute. I don't want to do that. I'm sorry. This is the 10-minute chart. And there's the S&P. I'm just, if you don't mind, I wanted to go back to the 10-minute chart. I wanted to show some things that I believe are quite interesting. There you are. So within the context of a spike to the upside because of the election results, and really, I don't know why I just kept ignoring the French. I just kept saying whatever the results were. But if I really thought it through, since this has been the thematic material for so long, the thematic material should have said there should be a surprise to the traditionalists in the French election, and the untraditionalists should have a say. And that's kind of what we're looking at. I mean, good grief. It was so obvious. My mind wasn't there. My mind was actually looking at other things. So I apologize, because that was a silly mistake. Now, what we've done is we've given back the big gains from about, so it says 23. So from 11 o'clock last night, when the next big phase on the up move started, going from 23.65s all the way to the high of 2376.75. That's 6, right? Yeah, just after 6 o'clock. In a shorter period of time, we've given back those gains. That's not the issue. The issue, if you're looking at the chart, is that we're still up 19 points in the E-minis. Even if we gave back half of that, we pulled back 9 points, it would still be a very big move from Friday's close. What we really want to be looking at is what comes back down with the market. We're looking at the SMHs. We're looking at the QQQs having gone to a new all-time high. And yet at the same time, I was looking at the broader index. And if I can do this, I'm going to go to the comp index, COMPX. And I wanted to show that it's towards the lower range of the day, but it did break out to a new all-time high. And that, once again, is the same sort of thing because you've gone from 2806, 27. This is actually E. This is even maybe an F. Look at this. This is an E in the composite index, and this is an F. And this has been a recycle, but I'm going to be as strict as possible right now, just going letter by letter. So this is an F in a news-related spike to the upside. This is an ABC, could be either, so it's E/C right here in the daily. So there's a lot going on and a lot potential. You know, we've got economic potential disruption this week here in the United States. Taxes, all sorts of things that are going to be discussed. So I just wanted to say that I'm not sanguine in the sense that I'm going to say to you the rotational correction is continuing. Why? Because the Dow has to break to a new all-time high in my work to recycle to the upside. And it's been repelled at this resistance line. The weekly chart, the technicals are still not great. As we were looking at the SMHs, we're looking at the Dow. The technicals are not all that great. So there's a lot of work to be done to close above 20,877. That was that peak C minus in the Chapman Wave 4. Now, so a question I had over the weekend was, is there something that you were missing? No, last night when the futures were very sharply higher. And I said, no, everything I'm looking at still pertains. There's nothing here. But we did make the Chapman Wave 5 and a trough D in the daily chart, which said, hey, now we can have at least a spike to the upside. But in terms of saying, is this the brand new start of a mega move to the upside, a break of the 21,169 level in the Dow? Is this a break that takes us to 21,400, where there's just absolutely no question we've broken out and the monthly chart is starting to accelerate even more? It could be. I need some evidence to say that we've stopped the rotational correction. That's what I need. And to that effect, I'm very aware of the XLF having spiked up the financials. They're closing in on this third hour of the day at the low of the day, but the day is young. The MACD's turned positive. The stochastic is rallying. Prices moved higher, but the weekly chart says there's quite a lot more room to go. So I'm trying to put this into the context of what is a surprise and what isn't a surprise. Because here's the missing link. The IWM weekly chart made that peak C. It's held very well. And the spike today is actually, it's not pulling back like the others. It's holding more towards the middle of the range. And there is a price, left side, right side price time match that says the 140.86 high of the 1st of March has until the 3rd of May to try to get back there based on the Chapman Wave inside wedge target line. It's gone above the arch rollover, and that says let's keep an eye on small caps. Very often the small caps can lead. So I'll talk a little more about that as soon as I get back. Basil Chapman, Market Conditions Hour. We'll look at oil and other aspects as soon as we get back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, folks. I've got a question. Yeah, I think that this question could kind of be typical of what's being asked. So, Basil, hope this note finds you and your household doing well. Yep, thank you. My question is the balance today, largely from the French election results, a counter-trend bounce or a trend reversal? I have a substantial position in SDOW and was thinking of closing out the position for a small loss. Thank you. Best regards. So, I'm going to make the suggestion that if you've got a little bit of patience right now, I would put the DXD has made its second very quick peak A, peak B, peak C, peak D. The first one took a little longer, and it's really unusual. You could go back I think it restarted. I actually don't think you can see a peak D in this vehicle, in this instrument. I'm trying to find it. Oh, maybe the ABCD. Okay, yes, you could have got one back in September of last year. So it's very rare because this has been a mega bull market for any pullbacks, and this is the 2 times short the Dow. So what I'm looking at here is that if you have the patience, it's at 1272. If you can wait a little bit longer, I'd like to see whether or not there is a pullback in the Dow to minus 165 or lower, or whether by the end of the day there's another buying spurt that takes it back to 212 or higher, and that's going to make the difference. But now what I'm going to say to you, David, is this. Within the context of what I'm looking at, there's a rising trend line, and it's just nicked it and now it's back above it this morning. If you look at the VIX index, VIX.X, you'll see the same very long-term trend line. Oops, let me just get softer. The very same trend line has support, and it went right to the support today. It went down to the VIX went down to 1114. But wait a minute, it's trading at 1138, just a little bit higher. And it's saying, wow, so far that's held as support. But look, the MACD turned down sharply. The stochastic turned down sharply. Keep your eye on the one on the left. Here we go, here we go, here we go. And you see what happened? The MACD here is just turning down, about to cross negative. And the slow stochastic didn't confirm the high that was made. And this is what I looked at. I looked at it the other day in terms of the DOG, which is 1-to-1 short, which is what we had. We don't have it anymore. But what I'm looking at here is if you've just got a little patience and a few points, what I'm going to suggest is you can keep 1/3 of the position, but I would take at least a half off if you're at 12.71. If it pulls back to, let me just give you a number. That'll be about 30 points. If it pulls back to 12.67, which I think you'd be comfortable with, because since you sent this to me, the DXD has actually rallied a little bit. So give yourself 4 or 5 cents, and then I would just extricate myself from that. I'd take quite a bit off. And the reason being, I don't see any reason to have risk here when what we're saying is that in the consolidation aspect, not all that much has changed. But if, in fact, there is a reignition and all of a sudden the Dow could find its feet and rally, you might find that those stocks that I was looking at, and in a moment I'm going to do the big cap index stocks, if I have a chance, you might find that the rollover starts to impact so that the Dow doesn't rally that much, but the others start to weaken. In other words, there's this counterbalance. So I'm completely wrong. That's why I'm saying give yourself a little bit of a stop. 6 cents. 6 cents sounds like nothing, but in this particular market, you'll find that if your DXD rallies, drops 6 cents from here at 12.71, there's a good chance that it could go even lower. So treat that as your benchmark. And if you even wanted to treat that as where I'm out completely, you say, that's fine. You'll have another chance. This is a market that's giving plenty of chances, both on the long side and the short side. Don't feel because you've missed something, oh my God, I've missed the greatest move. No, if you missed it, you'll have another opportunity to do whatever it is, up and down. So I hope that helps you. Next question I had was, left side, right side, Euro, EUR. I said I'd get to crude oil and all. I will do that in a moment. So, so here's the same thing. We've got the euro dollar doing the same as the SMHs. 1.09057 was the high on the 27th of March. Today's high is 1.09. I'll have to type it in. 1.09032. So it is 0932. Yeah, it's 093. So it's just a tad under the previous high. So and it's in leg C. You'll know very quickly whether or not we're going to get, and that's a perfect price, a perfect price match, which should be today, in fact. If by tomorrow the euro spikes even higher and the dollar pulls back even more, you'll know that euro is going to go even higher. So this is a very important moment for a couple of purely technical reasons. I just want to see, yes, so that corresponds to kind of what I'm saying, that the rotational correction is still going on, and I would not be surprised if the NASDAQ does start to pull back very soon, and maybe the Dow will rally a little bit as it does that. And that's my stance at this particular point. I'll have no choice but to start thinking of changing my mind and actually probably going long. If there's a close above 20,877, that was the high of the 5th of April with a peak C minus that fell. That should have been a minus right there. Edit, minus. Okay, now let's go to the TLT again. TLT is actually coming back very nicely. And one of the things that I had spoken about earlier was that I believe that the GDX had the pattern that said that this was the beak. You remember that we were looking at downside action in the beak that would be below this high right here. But I said that the TLT has a slightly different pattern, which is more the one-to-one pattern. 2356 was the high of the GDX, the gold miners ETF, that could see a pullback into that area, which is what we've got. But the TLT had just a slightly different configuration, and I wasn't sure it was going to pull back to the body of this. I thought it was closer to the one-to-one. I don't know, because the pattern that I looked at, the schematic that I drew in the weekly chart of the TLT, where the lowercase h goes to a lowercase m, is still in play. It's still there. So all I can say is that I'm going to have to try to stick to the discipline that I've had, and considering that there's a rotational correction unfolding, that rotational correction would be a unified splurge to the upside if the Dow breaks into the 20,000, what did I say it was, 880s? And that to me would say, hey, watch out. And if it does that at the same time as the QQQ series is not pulling back, but in fact starts a brand new move and is trading not at 134 something, but is really at 135.20, all I can say is this is an acceleration mode. It's going to bring in everybody now rather than what I thought would be later. When I say everybody, I mean the millennials. I mean the guy, my tennis player friends, most of whom I don't think are in the market. I haven't seen them for a while, but they were not in the market going into the fall of last year, and we'll see. I'll be right back. Basil Chapman, Dow's up 192. We'll be right back.
During the last century, there have been 34 bear markets, approximately one every 3.5 years. And since 1946, bear markets have accelerated to a rate of one every 5 years. When it comes to market corrections, the kind that take back 10% or more of your gains, they've been occurring at a rate of one a year during the last 100 years. Now, if you're in your 30s or 40s, you can probably weather the storm. It only took 13 years for the S&P 500 to get back above the highs that it made in 2000, which is much better than the NDX 100, which took 16 years to do the same. Look, it doesn't matter what age you are. There's nothing more important than protecting your nest egg. And on Wednesday, April 26th at 5:30, I'll share with you 2 simple patterns that have been present at the beginning of every bear market and how knowing these will save your retirement. We here at TFNN believe this knowledge is so vital that every member of our Tiger family will have a link on their members page for this 30-minute presentation. If you're not a member, come over to the homepage of TFNN.com and sign up now. TFNN.com, we've got your back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with Swim Lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
All right, folks, we're back. So here's the E-minis up 19. This left side, right side price time match in a cup formation is going to be very important. MACD is pulling back a little bit, Stochastic's pulling back a little bit, but at 88%, there's enough evidence to say that a push to the 2369, 2371 area could start to flatten the stochastic, which would say, aha, as long as you're holding above 80%, that's buying support. So I'm going to make it real clear. If at 220 this afternoon, between 210 and 220. If the E-mini is into the gap, it's below 2361. That's probably going to be a negative connotation for the rest of the day. Then watch this candle. This inverted candle, usually you see it at highs, but this is a recovery high, so I don't want to talk about any candle pattern yet. The day is young, other than to say it has gapped up. The MACD did cross positive. How it holds is going to be very important. The way it's looking is the stochastic went up a little too quickly, and that it needs to have a little bit of a breather. If that breather takes it below the Chapman Wave inside track support level, and it starts trading the 2359s, just be real careful. On the other hand, if at that 210 this afternoon Eastern time, 10 past 2 to 20 past 2, if it's rallied back and it's anywhere about 269, it doesn't even have to be much higher. That's great support. And if tomorrow the futures open tomorrow morning higher, that's going to be a big positive. My thinking right now is I don't yet see any change in my analysis that says rotational market, haven't quite seen the top yet in the Qs. It's getting closer and closer. The stocks I spoke to you about, sure, they could go on higher. But at this particular point with that verticality, it makes much more sense to consider that they're getting ready for some kind of a consolidation. And if the rotation says, now the NASDAQ can pull back, while the others, like remember the IWM, I said the IWM is not yet at its that leg D in the weekly. Maybe you see the rotation through. I don't know yet, but it's holding very, very well. So maybe the IWM needs to, and then it's May that sees the consolidation. All I'm saying is just be very specific, put in your tight stops. If a gap, so that's one thing altogether. Most of the time, the stops will be met. You'll be able to gauge your risk reward. And the only other thing is I didn't get to the crude oil, and crude oil right now is acting negative. It's still going down, so it's really not an issue. So the VIX index, we spoke about the VIX index, and as far as I can tell, you've got to respect the fact that it's pulled back really sharply. But at the same time, just like we were looking at the DXD, the 2 times short position of the Dow, it held that longer-term trend line support. Same with the VIX. If the VIX starts to trade in the 1098 or lower, it's at 1128 right now, 1098 or lower, that'll be enough encouragement to push this market even higher. But if all of a sudden, by the end of the day, the VIX is back at 1128, so if it goes to 1145 or 1153 or higher, that's going to say, okay, it's a one-off. We've got this big spike to the upside. Now the market has to settle in and say, what's happening here in the United States over the next few days? And there are a lot of things going on. That's all I can do. So with that in mind, the parameters are very clear. And the downside, I didn't say, if the Dow is at 20,742, if you see it trading at 20,690 or lower, that's not going to be a good sign. So that's what I'm looking at. The only way I see a breakout, it has to be a sustained move. The Dow has to go into those very high 20,880 area. Thanks for being here. Stay tuned. Don't forget Steve Rhodes' big webinar for any tiger. It should be on your page, on your dashboard, I guess. And on Wednesday night, it should be a fabulous workshop, just short, but he's going to be discussing really important things. I'll be back tomorrow. Have a great day.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN,